It's in your pocket, your bank, and your mind. But what is money? Our story begins before money, in a world of simple, direct trade. This was barter. A system with one very obvious problem. It requires a coincidence of wants. Both parties need the other's item. So, humanity found a solution. Commodity money. Items everyone found useful. In ancient Rome, soldiers were sometimes paid their wages in salt. This is where the phrase, "worth his salt," comes from. But cows were hard to divide, and grain could spoil. Humans needed something better. Durable, portable, and easily divisible. Around 1200 BC, people in China began using cowrie shells. These shells were the first form of widespread standardized currency. They were so influential, many Chinese characters from money contain the shell radical. But shells could be found. So China created the first metal money. This led to a revolutionary idea, the first standardized metal coins. Around 600 BC in Lydia, modern-day Turkey, the first true coins appeared. They were made of electrum, a natural mix of gold and silver. King Croesus of Lydia was the first ruler to issue pure gold coins. Coins had a huge advantage. Their value was guaranteed by the state. The idea of coinage spread rapidly across Greece, Persia, and Rome. Roman coins were a powerful form of propaganda for the emperor. But there was a problem. Rulers started debasing their currency. They would melt coins, add cheaper metals, and mint more coins. This led to massive inflation and eventually helped cripple the Roman Empire. Carrying thousands of coins was heavy and inconvenient for traders. In Tang Dynasty China, a new solution emerged around the 7th century. Merchants began leaving their coins with a trusted agent for safekeeping. In return, they received a piece of paper, a promissory note. These notes, called flying money, were easier and safer to carry. The government noticed and in the 11th century took over the system. The jiaozi was the world's first true government-issued paper money. Marco Polo was astonished when he saw the Chinese using paper as money. He brought the idea back to Europe, but they were highly skeptical. Europe wouldn't widely adopt paper money for another 500 years. Instead, European banks began issuing their own private banknotes. These notes were essentially IOUs, backed by gold stored in the bank's vault. This was the birth of fractional reserve banking. Governments soon took control, creating central banks to issue money. But this system was still tied to a physical commodity, gold. This changed in 1971. The world entered a new financial era. The gold standard was abandoned. Money became fiat currency. Fiat money has value simply because a government says it does. Its value is based purely on our collective trust and belief. The 20th century also saw the rise of money you can't even touch. In 1950, the Diners Club card was the first modern credit card. He created a cardboard card for charging meals at multiple restaurants. This separated the act of buying from the act of paying. The invention of the ATM in the 1960s put a bank on every corner. The rise of computers and the internet digitized money completely. Now, trillions of dollars exist only as electronic signals. 4. Only about 8% of the world's money exists as physical cash. This set the stage for the next radical evolution in money. In 2008, a paper by the mysterious Satoshi Nakamoto appeared. It proposed a new form of money, a decentralized digital currency, Bitcoin. Money without banks, governments, or borders. It is secured by a revolutionary technology called blockchain. Each block is a permanent, unchangeable record of transactions. This created the concept of digital scarcity for the first time. The first real-world Bitcoin transaction was for 2 large pizzas. Those 10,000 Bitcoins would later be worth hundreds of millions of dollars. This sparked the creation of thousands of other cryptocurrencies. We are now entering the era of programmable money. Money that can be programmed with its own rules and logic. Central banks are now exploring their own digital currencies, CBDCs. This could mean the end of physical cash as we know it. L'Explied Prot. From salt and shells to complex digital code on a global network. The history of money is the history of human ingenuity. It's a story of our search for a better way to trade value. Money is not a thing, but a shared agreement. A story we all believe. Its form has changed, but its function remains the same. It allows for cooperation on a scale no other species can achieve. It has financed wars, built empires, and funded incredible art. The story of money is a reflection of our own evolving society. But what is the future of money? Will it be centralized or decentralized? Will it be physical, digital, or something we can't even imagine yet? Alarmists, one thing is certain. The story of money is far from over. It will continue to evolve as long as humans have needs and ideas. Money is just a tool. It's up to us to decide how we use it. The ultimate value is not in the currency, but in the trust we share. Menids, and that trust is the most valuable commodity of all.